The following is a presentation of TFNN. It is now time for the Tiger Technician Hour with your host, Basil Chapman.
Hi everyone, Basil Chapman, Tiger Technician Hour. And what are we looking at here? We're looking at something really interesting. I'm just going to get this. I don't know why I don't get it set up before. I get everything else set up. But let me just do this because I want to go to the front page of TFNN. I want to go to Get Tiger TV on your handhelds. Actually, I'm not. I'm just going to click it on from my computer. Just yet another 1, 2, 3, 4, 5, 6, 7 screens. Then put it on one right here. There it is. I'm set. This is May the 15th. And it is a Wednesday. Wednesday is a great day, as all Wednesdays are great days, because, besides being tennis day, it is, get a kickoff right away. From 9 o'clock at TFNN, we got Steve Rhodes' fabulous show. Talks about Steve's candles and all these other techniques that Steve uses. I mentioned something a little earlier on, the way he uses the volatility index. We've got, that was 2 hours. We've got my show, then we've got Larry Pesavento. Larry comes on when? Larry comes on at noon Eastern Time for an hour. And, of course, Larry is the master. He introduced us to the Gartley and the butterfly patterns. Dave White has taken that even a step further with his technique of putting things together. He's our tech guru, and he's produced this fabulous program. It is the art of the chart using Tom O'Brien's information. We've got Mike and the Dent says, me too, Basil. Nice. Tennis Wednesday. Yep, Tennis Wednesday. Thinking of Tennis Wednesday, we've got a Bernanke mega bull market unfolding. Yep, we're getting a little bit toppy here. I'm anticipating some kind of short-term downside move. At this point, all I can say short-term, I've got other indicators that say certain stocks and certain sectors are going to take a real wallop when they come down. That includes many of the biotechs, but maybe they're not there just yet. A couple of things that are absolutely just so fascinating to watch. You've got crude oil, which was coming down, and now the airlines. What did the newspapers say? $8 billion in profits. The airlines. This is from, they turned the airline business, which was the business plan for an airline, was take as many people as you can on the plane, but take even more in your bonds and in your stock price right down the tubes, and then restart all over again. Somehow the same planes were on the ground, the same personnel, same everything, except there were just hundreds of thousands of people that got taken for a ride, just lost a fortune, start over, and then do it again. And again, what a business plan. And each time, the CEOs and others would make a fortune, and everybody else, it was like the unions, exactly like many unions today. I don't know if they're changing, but boy, unions were just, the initial thing of the unions was very important, because it gave you a 7-day or whatever it was, a 5-day work day, maybe 6-day work day, gave you hours. And then it's like every piece of legislation should have a time limit and a refocus and a re-vote on whether it should be implemented again. It shouldn't be there in perpetuity. And that's what unions did until, and I remember Dick Cryer on the show for years, I've been here 10 years, for years I've been saying that it is the union managers. They are the guys that are at fault. They should be saying to the CEOs of General Motors and Ford and Chrysler, they should be saying, we will not work for you if you produce absolute junk, just rubbish. You produce quality cars and you'll keep us in business. They were as responsible as the CEOs. All right, got that out of the way. Now let's go back to what I was talking about. Bernanke has, in fact, created a mega bull market. And at a certain point, there's going to be a period where people keep talking about, when bonds go up and when yields go up and bonds come down, blah, 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 blah. And I don't think, I've been talking about this for a long time. There'll be an elision, there'll be a transition period for a while. I don't think it's going to be more than 5 to 6 months. And that transition will say, oh man, it's working, because now you've got your tax increases, markets at new highs, and blah, blah, blah. And it'll look like, hey, this is just the most beautiful, smooth dovetailing of a game plan by a theoretician, Bernanke, and an implementation by a theoretician, Bernanke. Brilliant, absolutely brilliant. I didn't think it would work at first, but as it started working, you could see that it was just brilliant. Now you've got all the other countries copycatting. When you get to the copycatting phase, you know that a big mistake is going to be made. And that big mistake will be made by us at some point. Never fails to happen. That will be the mega bull market explosive move to the top. We are seeing right now an incredible, I'm looking at prices of art, 35 million, 47 million for names that you never even heard of. We are going into a bubble phase in art, and that'll be contemporary art as well. And I've spoken about that about 4 years ago. I said contemporary art will be the thing. And I don't know if that's actually happening, but I got a feeling it's happening, that more and more contemporary artists are seeing extraordinary prices. And now what we're looking at is the buy the dips mentality pervasive. And at some point, I'm not sure if it's May, maybe it's going to be June, I'm not sure, but we're going to get one heck of a pullback. Scare the daylights out of everybody. But as I just typed into the den, I think that we have just stepped on the trampoline. So there's maybe a little bit of bounce left, but when we push down, the further we push down, that is when the market has this very strong downward move. I'm not sure we're ready for the big one just yet. That is going to be a springboard for a massive move to the upside, and that will get everyone that are in the safety of bonds to finally say, I've had it. I cannot live with this tiny interest rate coming my way. How can I live? I've got to step into the bonds, into the stock market. And when that money flees bonds and goes, that doesn't mean to say that bonds will fail. Just when that money comes out of bonds and goes into stocks, that's going to be the start of that big phase. All right, enough with that theoretical stuff. Let's get to the practical stuff. The Dow is up. Let me get the numbers right here. Oh, after Larry Pesavento comes Darryl Martin. After Darryl comes Dave White. After Dave White, is today Wednesday, got a bit of a break. And then Tom O'Brien, 4 o'clock till 6. What more could you want? Wrapping up the day, 4 o'clock till 6. Tom O'Brien. And great seminar the other day, Tom. That webinar here in Massachusetts at Burlington. So folks, go listen to Darryl because of that. For those of you who went to the show, you know that the diagnostic trading hour pertains exactly to that. You've got Larry Pesavento. His work pertains to Gartleys and butterflies, and of course Dave White's is in fact the programming of that in the art of the charts. Now, my service is the opening call. We remain long. We almost got taken out today. I better, before I talk, let me just double check, because you don't want to say something that's not accurate. The stop was no, yes, no. Let's have a look. So no, we're still long. 200% long for a lot of points from. I can't even remember where it was. Let me just have a look here. So let's see. Cannot misspeak. Oh, yeah, from right here. From the 2nd of May, around about 14,710. Dow's now at 15,240. That was our last long position based on the Dow. That was the DDM, the 200% long. So, with that said, and in fact, what we're looking at right now is the Dow is up. After being down, is up at 15,241, up 26. The S&P is up at 1651, up 1. The comp index is up 10. Now, that's really fascinating. Why? Because Apple is down $10 at 433. You see that you got it. It's so important to focus on your indicators. When you start relying on a particular stock, if you're looking at one particular indicator instead of looking at you've got to have the umbrella of all these different things, and you've got to be very selective in choosing which ones are the ones that are going to be working at that time and which ones continue to remain the most important. And that's why when I looked at the Qs, let's go to the Qs right now. The Qs, QQQ, Trust Series, based on the Index 100. The high yesterday was 73.74. The high today is exactly the same. So this continues leg D. But that's not the issue. The real issue is what? The real issue is that the MACD is expanding. And the slow stochastic is stuck at 95%. It is really important for that stochastic to remain strongly above 80% in my work in the ChapmanWave for us to be able to maintain an upward momentum. Look at the 9-period exponential moving average. What a beautiful indicator. This tool, that black line, let me show you here. Yep, you can see it. I'm looking right here at that beautiful, man, the technology at TFN is fantastic. Look at that. You can just see it so beautifully. See, I'm watching my arrow there. There's a little bit of a lag. There it is. See that 9-period moving average? Boy, that arrow really wiggles around. But the MACD has to cross positive for this to be able to sustain itself. If it starts to deflect lower, we won't make more than the D or maybe an E by going a penny or two higher, and then start to pull back. The stochastic is at 82%, and that is good. So far, the technicals are all aligned in the Qs, at least right at this particular moment. Now, the weekly chart is absolutely extended. It is a vertical line going straight from the 9-period exponential moving average support at about 69.50 straight up to 73.68, where we're at right at this very moment. And that is a line that we've got to watch closely. But I have another indicator that says actually the Q weekly chart can still go a lot higher. Now, I say that even though the Qs have made a recovery high that has far exceeded the left side high that was the diagonal trend line, the red line, that comes in at about 71.08, because right now it's at 73.67, up 15 cents. But that's not the important thing. The important thing is it is the Roman candle of October in the monthly chart, October of 2000, where the high was 90.25 and the low was 73.63 and the close was 81.70. So I'm watching this really closely, because if it's able to get into the body of this candle above the high of November of 94.94 anytime in the next 2 months, to me that'll be I'd say it, and I'm on record of saying this, that the high that was made back in March of 2000 at 120.50 in the Qs was the all-time high, and that never in my lifetime, market lifetime that would I ever see it even getting close to that level. But at 73, it's still 50 points away. It's got another, 60% to go. But boy, I might eat my words. You know what? I would love to eat my words. But that's on record, and I'll stand by that. We'll see what happens. We'll talk about gold in a moment. Down.
You take a hands-on approach to managing your investments, and whether you're bullish or bearish on Chinese stocks, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor, Foresight Fund Services, LLC.
with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Victor Jones, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
McEwen Mining is a high-growth, mid-tier producer in the Americas with a market capitalization of $1 billion. Experienced mining executive Rob McEwen, as chairman, CEO, and president, owns 25% of the outstanding shares of McEwen Mining and has put in place an ambitious business plan with the goal of qualifying for inclusion in the S&P 500 by 2015. With $70 million in cash and liquid assets as of the end of 2012 and completely debt-free, McEwen Mining is poised for growth. Production in 2013 is forecasted to grow at 24%, reaching 130,000 gold equivalent ounces, and over the next 3 years, McEwen Mining projects that their production will increase to 290,000 gold equivalent ounces, almost a threefold increase from last year's totals. If you'd like to find out more about McEwen Mining, click on their banner on the front page of TFNN.com or check them out on the NYSE or TSX under the symbol MUX.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or Tiger TV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Basil takes your phone calls. Now, toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi, everyone. We're back. Basil Chapman, Tax Technicians Hour. About to talk about gold. Now, gold continues as I see it. Well, first of all, let me just show you this. This is the dollar index. The dollar index is a very strong leg C up. What is it doing? It is retesting. Remember, I spoke about this yesterday. It is retesting the left side. This is the left side, right side price time match. I had to move it over two notches because of the way the angle and the way I look at what's called the ChapmanWave inside wedge target line. And the way I drew it, I not picked up I didn't realize that the trend line had moved. Sorry. But this is the trend line that's very important. From that low goes all the way through in the weekly chart, and it touches those high bars. It's really important. I love that. 3 high bars, 1, 2, 3. Fourth high bar comes in when? Right this week at exactly 84.10 is the level that was the left side, right side price time match to this week. And we hit 84.09. We've missed it by 1 cent, and we've still got a day to go. Most importantly, it is the daily that's saying leg C up should go because the stochastics at 90% and the MACD's opening up, and there's a possible ChapmanWave squash. What is the ChapmanWave squash? I showed it to my subscribers this morning, a particular stock that we've owned and took a very nice profit. Went back in 2 days ago, and it's acting quite well, but it hasn't started yet. That move that is very important. And what that squash says, that using technical tools, there should be a price power move that takes it to a leg C, And then the stochastic should start to slow down, and the fast-moving average of the MACD should take it higher to at least the D. So the fast-moving average of the MACD should take it to a leg D after peak C is made. That would be higher than whatever the high is for this week. And then whatever the peak in the weekly chart is, if this is E, that means that it will be the moment it goes to 84.11. That could happen today. You've started a leg E up in the monthly chart. It could in fact be an E/C. That would impart to me the information that says that the dollar. Now, this is so fascinating. You remember I was talking about how there's the economy is improving slowly. Jobs should be coming back at some point. And this has allowed the Fed, I believe this is happening. We won't know. But this is the first time in years, maybe even in 8 or 9 years, that possibly, certainly from 2011, at least in this phase, but it's the first time that maybe the Fed is going to allow the dollar to strengthen. Every other time it's whack-a-mole, bap, 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 bap on the head, and they knock the dollar down. I don't know. This is just my summation, but all the proof is there. This might be the time that they free up the dollar, saying, hey, the market's acting well. Even if the defense of international stocks are impacted slightly negatively, their earnings have improved. We can allow the market to move higher and the dollar to move higher because there are enough sectors that are recovering and doing much better that we can allow some freedom in the dollar to at least participate like it should. Every other time it's been knocked down. They would take it to 80. Well, I'm going to go one step at a time. I don't want to just jump out and give a number. That would take it to, yeah, it is the monthly chart. 86.87 is the 200-period exponential moving average. Now, that would coincide at some point, I believe, with the strength in the dollar continuing to weaken. This is a long term now, looking out. Weaken gold, and that would allow the market to take a deep breath for the next big phase up. You do not see stocks like this. I'm going back to gold in a minute. Stocks like this. Kellogg's. Oh, wait, what did I see this morning? Kellogg's go vertically up from 46 to 60, 66, 67 in just one straight move, one single leg to the upside without some kind of a retracement. It just doesn't. This is a defensive stock. Or Coca-Cola, for instance, another defensive stock. Straight up moves, or not quite as much as Coke, although it's been a huge move. So that's what I'm looking at. That's number one. Number two is that tells me that the GLD is in this pattern that I circled, that I showed yesterday, that has two arch formations. We've only got one so far, but I believe that there will be another one, and that'll occur. Well, we don't know, because if the dollar is still to make peak C and then leg D, that could get a test of the 130.51 area. We're at 134.51. I suspect it's going to stop very soon, that the GLD will stop somewhere around 132, let's call it 133.62 to 132.80, and then start the next arch formation. And that arch formation, from the way I'm looking at it, hey, it's going to make 143.43 a fantastic rally if it can even get there. But it will be the H that goes to the M pattern. I'll be back. We'll talk about other things, and I've got a subscriber call.
TFNN is excited to launch our brand new software charting program, The Art of the Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind software, Art of the Charts allows you to scan for Fibonacci formation setups, including Gartley's, butterflies, ABCs, and much more. Art of the Charts is designed to help you when scouring the market for stocks just beginning to form the trading patterns that many investors spend days, weeks, and even months searching to find. As part of our introductory pricing, we're offering licenses available at only $59 per month. We're so confident that you'll love this new outstanding piece of charting software that we'll even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Lock in your low price today by ordering your copy at TFNN.com. Tom O'Brien's daily newsletter, Market Insights, gives you Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. With Market Insights, nothing is left to guessing. With the market at record levels, volatility is here, and now is a perfect time to take advantage of a 2-week free trial to Tom O'Brien's daily newsletter, Market Insights. As recently as March 26th, Tom advised his subscribers to liquidate their 4 short-term equity holdings, closing out all 4 positions for a combined 15.9% profit, and on April 1st, Tom advised his clients to sell their longer-term position in AIG warrants, locking in more than a 40% profit in just that one trade. If you'd like to see the kind of newsletter Tom O'Brien sends out to his subscribers each morning, then sign up for your 2-week free trial to Market Insights today by visiting the front page of TFNN.com. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped, and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's Nadex.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
This segment is brought to you by Harmony Gold. For more information, just click the Harmony Gold banner on the front page of TFNN.com.
Folks, I'm going to get to a stock with the symbol CEO in a moment, but I just wanted to finish. I had a question to Dan, a great question, about silver and the ZSL, which is 200% ProShares Ultra Short silver. And as I see it right now, the ZSL is trading at 79.76, up $4.61. In a sense, it's kind of matching the waveform, not the wave letter, that is, of the dollar. So, yet it doesn't have quite the same characteristics. So what I'm going to say is the ZSL, I'm calling this leg C, and it's made a cup formation. But it's actually the inverse. It's a pattern that I've been studying for quite some time. I haven't yet, the only conclusion I've made is that it's actually very positive, but I have to really confirm that with many other chart formations that I see like it, and there are not that many, but there are enough that I can at least start doing some work on it. I've done some work on it, and that's the inverse, not upside down, but it's the inverse handle and cup. Instead of a cup and handle, you get a handle and cup. And what's the implication? Implication is usually that you get, it's really the ChapmanWave cup and ladle formation that is the most important function here. And that is that the breakout of the left side high, in this case 80.18 on the 23rd of April in the ZSL, that's what it needs to go right through, and that should take you to, I typed it in here, but it's a little high, so I'll put it up there. should take you to a leg D, and that would correspond to the dollar going to a leg D, and then it should start to pull back. But wait a minute, if the dollar is going to pull back, and if gold should have a bounce, that's that next move up in gold, then for what are we looking at? We're looking at I would think that the dollar would move up, but the market would move down. That's usually the case. It hasn't been that case for a while. They're actually moving synchronously, in concert. So the analysis has to be that we're looking at a situation where you have to just do waveform by waveform. But for me, the most important thing is if you're looking at silver, and I hope I've got the right contract, just for now, I guess June is, let me see, I can't even remember, what is the end? Is July. Just for now, the July contract has the same kind of pattern, that it's the Roman candle in the monthly chart that is my major focus. And it says that we've gone low enough that at some point we're going to break the low in silver that I'm looking at July of 21,120. That is the low of last month on that candle. And we will go under it. If we go under it and don't immediately snap right back very strongly, that's not good, because it portends $18.39 as the 200-period moving average for silver looking out. Meanwhile, this pattern here, yes, it could fail completely as an H pattern in the silver contract, but my suspicion is that we've made one H, and then we're real close within about 3 days. I'd say by early next week, there should be another bounce in silver, and that bounce should take it to, and now it's going to be more difficult, but it has the recent high of 24.83 as very strong resistance. And if you were looking at the SLV, the SLV, the iShares Silver Trust, has gone underneath the left side low. That is where we have to watch 21.96, 21.99, and today's is 21.73. Trough E has gone to leg F to the downside in the weekly. We've taken out that candle from last week. I've got to look at this differently, and I've got to say, be very careful, because the silver is way weaker than gold. So, number one, stay in your ZSL. Remind me again in 2 days' time. Please just type it into the Dan Monday. On Monday, let's look at the ZSL again. That should be the next leg. That could be leg D. I don't know. We'll see. That's number one. Number two is the ZSL needs absolutely to close today or tomorrow back above 21.93. Was it 21 point? Not just above 21.96, but powerfully above 21.96. Otherwise, silver's saying this is not good news, and that the 24.22 is the 9-period exponential moving average in the weekly. That is far away, but 22.72, just less than a point higher, is the 9-period moving average in the daily, and it hasn't closed above there since that one pop back on the 3rd of May. I don't like that. Thank you for pointing it out. So that's that. Now let's go to CEO. All right. And there's another question there. Where did I type CEO? I typed it into the den. That was a mistake. I'm going to type it in here. I don't even remember what CEO is, but it was a great question, and Bill did a fantastic ChapmanWave study of it. But I wanted to just confirm. CEO is CNOOC Limited ADS. Oh man, this is so familiar. CNOOC. I love it because it's such a cute name, but I never know what the heck it is. CNOOC. There we go. CNOOC Limited Performance Management. I want a major. Hey, is this Chinese? Oh, China National. No, is that China National Offshore Oil Corporation? Yep, so it is. That's why it's a cute little name. China's largest offshore energy explorer sold $4 billion in bonds in the biggest dollar-denominated offering from Asia. That was May the 3rd. Okay. Well, you know what? What I said was his analysis was great. It went to a peak C in the daily. In a left side, right side, price time match, but it did not get to the high of 195.22. CEO is the symbol, and it's trading right now at 185.68. What's most important about this chart is that it's making a high-level consolidation after peak C. It should re-attack, and I mean attack. It should just charge ahead because of the fast-moving average and the MACD being still good. And the fact that it's holding the last 2 days is good, But with a market like this, it should really be participating with the market. My biggest concern, there were two concerns. One is that the weekly chart has had a successful retest in the H pattern after peak F top in the ChapmanWave. Last one was a D, this one was a peak F, and it keeps pulling back from that level, but it's made a higher low bar, and the low of 171.58, 171.00, round number. Whew, just as well I did that, 171 RN low. So far that's the low. I'm going to be looking at this very closely now. I can't remember now if you'd said that you were, in fact, Bill, let me just have a look. That is a V bottom, yep, starting leg D. Yeah, it hasn't gone to the D. The MACD and the stochastic in the daily are not bad, but it's the weekly chart that needs to see the MACD cross positively. Okay, this is what I'm going to suggest. It's the monthly chart that is the concern here, because it has a symmetrical wedge formation. And that wedge formation says that unless at the end of May it really does a nice crossover of the 9-period moving average, which is at 196.05, and closes somewhere around, it doesn't even have to do it, 197.80 or 198. If it can do that in the last week of May, that would be fantastic in terms of the monthly, because it'll say, save the day by pushing once again over the 9 EMA. So here's my analysis. I like the stock. I like the way it's settling, and I like the way it's holding well. I don't like the fact that today was the day that it needed, days young, but it needs to cross 186.84. It's only a point and a quarter for a stock like this. That should not be very much. So by Friday afternoon or Monday, it must not close underneath 184.20, because if it does that, then all of a sudden the bar of 181.60 of the 2nd of May becomes the target. That becomes the target, because if the MACD's fast-moving average crosses negatively and the stochastic doesn't look good, it's going to weaken the MACD in the weekly chart. You see how these time frames are so important? Here's my analysis. If you're looking to go long, I would rather go long strength. I don't want to buy weakness on the stock. I want to buy it preferably at 186.90. I want to nibble at it. And if it holds on a pullback to 186 to 185.75 and then pushes even higher, then I add another small position. I tighten up the position on my original one. I treat the second as a trading position, and your target would be a move above 192.60 for leg D, and then a push into the 195.22 area. That might be a tall order, because it looks like it needs more time. So if it needs more time, I don't feel you've got to rush anything. You want my opinion? I step aside for today. I give it another day. Let's look at it together. I don't mind looking at it again tomorrow. At this particular point, if I remember correctly, the 120-minute chart, made a peak A, B, C, D, E, and it's pulling back and holding very well thus far. But you can't use time. I want price. A bull market uses price to the upside. It uses every single opportunity of weakness to see buyers come in. You see all other resources become secondary. You see the commodities become secondary to the move, and that is like gold pulling back 31 points right now. It is secondary because the fear factor is gone. So CEO, we'll look at it again. There's CNOOC Limited. I did the silver, and now I'm going to do something else that I keep for days. I've been wanting to do it, and even in my opening call, I kept wanting to buy it, and I kept, for some reason, overlooking it. The XLF is acting fantastically. It's in leg C up. That's the reason why this morning when you had no idea how much time I spent on my position and trying to get my subscribers to be positioned correctly. We missed two fantastic moves. We had a great small percentage move on Ford. I tried to get back in yesterday. We missed it by 3 cents, and it was so stupid. My thinking was that it was a longer term position. I should not even have put a stop in from the original buy lower down. I should have just said, this is a small position. We want to add to it on dips. Why is it we get so, I've got this fabulous technique of the ChapmanWave. Sometimes human beings get in the way of beautiful, beautiful techniques, and I got in the way. I have to apologize to my subscribers. We could have had Ford up at Ford right now, $14.73. I mean, The reason why I brought it up, because it's in leg D, breaking out of the left side, right side price time match in a beautiful cup formation. MACD stochastic, everything looks great. Spoke about it, wanted to do it in my update yesterday. Not good. All right, I know we've got other really nice positions, but that's not the issue. Each one is, it's like when I play tennis. Every shot I run for, then I have to say, well, what's the score? Am I serving? What's the score? Because I go for every single shot, and that's it. So now, Ford in the monthly chart is in leg B. It is looking beautiful. Let's chalk this one down to dumb mistake, an obscene mistake. It was one that should never have happened. My fault. I'm taking full responsibility. We could have had a beautiful move from 50. We would have been up, I think, over a point already, over 10% in just days. So that's the way it goes. I don't know what to do. It's now too late because it's moved up, at least too late for that position that I wanted. Now let's go back to the XLF. So the XLF, and this is the reason why I spent so much time this morning saying these are the levels that I want to hold, because if they don't hold, there are other things that we're going to be doing. And so far, the level that I'm watching closely in the Dow is 15,170. If the Dow takes that out to the downside, then I have to say, okay, a little yellow light going on here. I've got to be a little bit careful. Only because why? We're in leg E up in the ChapmanWave in the Dow. We're in leg D in the S&P. But I said to my subscribers in my opening call, there are just too many stocks that are in leg C right now. And the XLF is one of them. And it still needs to get to D. And it's a spectacular move. The MACD is at 95% and just hasn't yet flattened out. I said the MACD. The MACD is very strong. The stochastic is at 95% and hasn't yet flattened out. And that's, to me, that's really important. The other thing is that the weekly chart, I'm considering this is not an F. I'm taking the F away. I'm considering this is recycled. This is now brand new leg B. So we've got leg D. We've got, is that A? Is that E? Oh, wait a minute. Yes. 1777, 1775. All right, I have no choice. I'm taking that back. To call this leg A, brand new leg A in the weekly chart of the XLF, it absolutely can turn out that way. For now, all I'm doing is I'm going E/A. I'm calling that A. That really shouldn't be A. I just have to call that E. Oh, if you're using the ChapmanWave, folks, we are in F/A in the weekly chart of the XLF, the S&P Select Financial Spider Fund. That implies that it is really negative because it's leg F, or it is really positive because it's leg A. I could make a case that maybe it's B. I don't want to do that now. I don't want to make fuzzy stuff. I missed something. I hope I missed something. 66, 67, I didn't miss it. Oh, I thought I missed a peak there. That would have made it so much easier. CD, I would have an instant restart. This would be ABC to the upside. All I can say, the XLF is going to be a dream come true for many fund managers. Why? Because they are going into this lower priced ETF, and I think that's what's happening right here. I'll be back. Basil Chapman, Dow's up 28, S&P's up 4.80. Be right back.
Recently, Basil Chapman has had some outstanding trades in his newsletter, The Opening Call. Each morning by 9 a.m., Basil uploads his newsletter to the TFNN servers so that his subscribers can access his expert trading advice. Basil gives his take on the direction of key indices and updates any active trades that his subscribers are currently in. Just recently, Basil subscribers closed out a short position in Chipotle Mexican Grill, CMG, for more than an $86 profit per share, over a 20% gain in just one position. If you'd like to try out Basil Chapman's newsletter, The Opening Call, then visit the front page at TFNN.com and click Trading Newsletters. There you'll find Basil's newsletter, The Opening Call, where you can request a free sample copy. Also, don't miss Basil's program, the Tiger Technicians Hour, Monday through Friday, 11 a.m. Eastern, on TFNN.
Tom O'Brien's weekly newsletter, The Gold Report, has helped subscribers for over 10 years navigate the high-risk world of exploring and producing gold companies. And now's a great time to sign up for a free month-long trial to see the kind of insight that Tom delivers for his subscribers on a weekly basis. Every Monday, Tom O'Brien issues a quick update on the metal market, giving you his take on the HUI, XAU, GLD, dollar, bonds, and much more. Tom follows Monday's update with a full gold report, which is delivered to subscribers Tuesday afternoon with detailed coverage of 24 separate gold or metal stocks, as well as another 10 to 15 stocks that he lets you know are on his potential watch list. Get your month-long free trial to the Gold Report today by visiting the front page of TFNN.com. Don't spend another year navigating the metal markets on your own. Act early in 2013 and make the most of your gold and metal market investments. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Let me tell you something, folks. I have people coming up to me saying, I just can't believe the amount of work that Steve does on his newsletter. And I says, I absolutely agree.
That is a recent clip from the Money Masters show that Tom and I do each day at TFNN. My newsletter service, Mastering Probability, is much, much more than a newsletter. Yes, it's outperformed the S&P 500 by 100% during the last 15 months. But more importantly, it's an extraordinary education, a roadmap for your success. And it's yours risk-free for the next 30 days. Just go to the homepage of TFNN.com and click on my name, Steve Rhodes, and then Mastering Probability, because everyone needs a success strategy. For most, it's a competitive edge, the will to win, the drive to overcome any obstacle. Whatever you call it, winners find a way. Find your way to Mastering Probability today, because your journey to extraordinary rewards is just one click away.
This segment is brought to you by BackTech Environmental. For more information, just click the BackTech banner on the front page of TFNN.com.
Hi, folks. Got just a short while. I got a bunch of questions. Let me just deal with this. One about Tigers in the GLD. I just want to. I'm not sure we're looking at the same thing. I just want to clarify. The GLD Daily made a trough E at 130.15 on the 15th of April. It's rallied up to a B minus. A B, which will be most probably a B minus. But at this particular point, the 120-minute chart has gone to a peak G, and on the troughs, it's down. It's an A. It's, I believe it's a B, a C, maybe a trough C. But most importantly, we are starting to get some kind of support. So HEL 135.35, we've gone to 134.43. So 135.35 is not going to work. It's going to have to be 134.08. Yeah, it has to be this candle, 133.62. We've got to bounce back into the 130. We've got to get to the 135.80 to the 137.16 level to start some kind of a rebound. But gold, the dollar is in leg C. It has to pull back from a peak C and then go to D. And at that point, I think gold will be ready for that next arch. I said I don't like it. There are certain stocks that maybe will be good. I'm looking to see if it's even worth. I don't know if I even want to play the gold, even if it bounces. There's just so many other stocks that are looking great. It's just, I think it's risky at this point, but there could be a very nice percentage, but not a big point move if we make a bottom somewhere between it's going to hold the 134. So that's number one. Number two is there was a question, would I look at, I had it already, toll. Great question, because why? Toll, one of the leaders in the home builders, is making a leg E with a potential doji. But wait a minute, you can get all very excited about that. It's gone above the left side high of 36.68, and the stochastic's at 93%, and the MACD is good. I'm going to say that yes, I do see a pullback in toll, but I believe that the toll at 36.97 TOL, really important that toll holds between 36.12 to 35.59. If it pulls back deeper, it's going to be very important. Why? Because the weekly chart is making this either a U or a W, it depends on how you look at it, formation, and it says 34.98 is the 9-period moving average. If in the next move down in the market, toll pulls back, the monthly chart is only at peak B. It should go to C and D. So I'd be looking to buy. At this particular point, if you're long, I'd say, you know what, if you want, hold the position if you hold from much lower down. But if not, just take a little bit off right now, just a little bit, to congratulate yourself for being so successful. And that little bit you want to add back between 36 and 35.50, because you're putting it back $1.50 lower. So even if it pulls back, you're still in a better position. So I hope that helps you. But the weekly chart needs to see the stochastic and the MACD improve a lot to be able to sustain a move that takes into the 39.40 area. So I suspect we've got a little bit of a pullback, a breather coming here. Hope that helps you. Now, this is very important. What I want to do is just give you this bit of information, important to me. I'm looking at the Dow. It's extended its leg up. It's got this up channel line. For those of my subscribers, they know that the way I'm looking at this. They know about the stalk leg, the body, and the neck that's forming right now in the 120-minute chart. All these different other techniques. The volatility index at 12, underneath 13, is buying pressure. Now, what's really important at this particular point, I'll just quickly show you this, because Larry Pesavento is about to come up. And fabulous show as always, I know that. This is leg E, and the Dow is just getting into the channel, the dash channel there, that says that's where you should expect resistance. I'm preparing for it. We've been long since the 3rd of May, 2nd of May, or so 3rd of May. I'm looking to maybe, we've already lightened up, taken profits in part of the position of the 200% long. I don't mind if we get taken out at this particular point, because I think we're getting now into the choppy period. So I hope that helps you. And to stay tuned for Larry and all the great shows here on TFNN. You could go Tiger Dollars. If you want to use that to try my subscription in the opening call, I think you'll be satisfied. I hope you'll be satisfied. So I'll be back tomorrow. Have a wonderful day, and stay tuned here at TFNN.